Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us again here at AusBiz. Let's get across what we saw overnight. Global shares ending higher on easing concerns over tariffs and the impact of AI on business models. Wall Street's major indices advancing to two-week highs led by a rally in tech stocks ahead of Nvidia's earnings report after the bell. The chipmaker reporting a record $68.1 billion in revenue in its fourth quarter, driven by data center revenue, which was up 75% from a year ago. The world's most valuable company expecting fiscal first quarter sales of $78 billion with January quarter sales of $68.1. Shares were up more than 3% in extended trade. Elsewhere, Lowe's forecast full-year sales and profit below Wall Street estimates amid a stagnant US housing market and moderate consumer spending. Exxon Enterprise shares surged after the Taser maker beat fourth quarter profit estimates. Among the staples, alcohol producers Brown-Forman and Molson Coors fell after UK-listed Diageo forecast a 2 to 3% organic sales decline this year and cut its interim dividend in half. And shares in GoDaddy tumbled after the internet services provider forecast annual revenue below expectations. US-listed shares of the copper miners, including BHP and Rio, rose, tracking the price of the red metal on growth and demand optimism. And US-listed shares of lithium miners rose. That's after Zimbabwe suspended exports of all raw materials and lithium concentrates with immediate effect after the government alleged malpractices. Well, locally, the Reserve Bank Governor Michelle Bullock has said judging the Australian economy is more difficult now than in previous periods of tightening. Speaking last night, she said, now we're in a situation where the labour market we think is a little bit tight, inflation is a bit elevated. I don't think it's taking off again. We thought the economy was in balance. Maybe it's a little tighter than we thought. It's not like we've got a situation where it's very clear what we have to do. People have to be patient. Well, her comments came in the wake of January's inflation data, which showed consumer prices rose 3.8% over the year. The US tariff rate for some countries will rise to 15% or higher, according to US Trade Representative Jamison Greer, who said, right now, we've got the 10% tariff. It'll go to 15 for some, and then it may go higher for others, and I think it will be in line with the types of tariffs we've been seeing. Well, US Treasury slid for a second straight session as risk appetite improved and investors prepared for a deluge of government and corporate issuance. The US 2-year was at 3.47 a year, 47 I should say, the 10-year at 4.04. Australian 3-year government bond yields fell to 4.27, the 10-year at 4.72, markets pricing in a 15% chance the cash rate will be hiked at the next meeting in March, with around 1.5 more hikes in total by the end of the year. The US dollar index is down slightly on the day. The Aussie is trading at 71.2 US cents. Oil prices slipped as a much larger than expected US crude stock build outweighed the threat of oil supply disruption from any potential military conflict between the US and Iran. Brent futures at $70.6 US dollars a barrel. Gold has gained on safe haven positioning over concerns that tariffs could stoke inflation. Spot gold currently up at $5,190 an ounce. Copper was up. Iron ore around 2% higher at 101 US a tonne. And Bitcoin, well, it surged overnight. Currently just below 69,000 US dollars. All right, let's get across those market moves. Ira Epstein joining us again from Linn Associates. Ira, welcome back. So, of course, we also heard from Trump in the State of the Union address. I don't know whether you actually took anything out of that was meaningful, but clearly a focus has been on tariffs and what that is going to do to both the US and global economy. Would it potentially feed into inflation, do you think?
Well, to a degree, but I think that what we have to turn our attention to is the events right in front of us, and that's going to set up an awful lot. We have tomorrow the US-Iranian talks, and what happens with them? If Iran stays just where they're at, which is they're going to continue to enrich uranium, they have no controls that they want put on their missile defense systems. They want the ability to continue to give money to the insurgents. Then what you have is more of the same. In fact, exactly what we've had president upon president in the United States for 50 years. The problem for the Iranians is they have a different man in this now. They have a president that has already shown He's not scared to attack. He uses his word as a negotiation, and then he backs it up with doing what he said. And simply put, I think they're playing with fire. Unless they present something at the last minute, and I use the word the last minute because what they haven't done is what they said they would do over the weekend. They were going to present their term sheet, as I'd like to call it, as to what they expected of the U.S. with what they're proposing. Well, they didn't do that. They said they'd rather now do it tomorrow. To me, it sounds like more of a ploy to buy more time, and I think they're out of time. I think the U.S. forces are about where they have to be if they're going to attack. I think the U.S. is prepared for anything. I think the end goal, contrary to what the president says, is the downfall of the regime and to finally get whatever's going to be in place. It can't be worse than what you have right now. So we'll see where that goes. And I think that when we talk inflation and other things, depending on how that goes, is important. Because oil affects everybody. The Strait of Hormuz represents, 20% of the world's energy needs going through there. Iran is now becoming a major producer of natural gas. They're getting online. All you need is one ship to be sunk by, it could be the Houthis, it could be anybody that does it, and you have a different game. So trying to understand the world in a context that doesn't take that into account, to me, is a big mistake. I think tomorrow's an important day, and all the Iranians keep saying is they want respect. I think they better respect the armada that's right off their coast.
Are you then favouring those safe havens, gold in particular?
Yeah. I think that going into the report, there's nothing wrong with owning some futures, maybe writing some options against it in case they come up with something at the last minute that protects you. Or I don't think you can buy options. I think they're too rich. So that's about the only way I see to protect yourself. And why not? Because that's it. Same with energies. Now, what I'd expect to happen is if Iran surprises and all of a sudden they're willing to give up their 60% grade uranium, not dilute it, give it up. There's a huge difference between the two. They might get the president's attention. But to say they'll dilute it and they'll be in control of who's going to come in when, to look at how they're doing their enrichment and what they're doing and where they're doing their storage. Haven't we seen that play already? And it didn't work out. Didn't they throw out the nuclear inspectors from the UN? So I do think they're at the end of a string. They have to make a decision. And if this is how they think it's their only choice they can do to save their regime, then I think tomorrow's going to be a very rough day in terms of reality check. I can't tell you when something would happen, obviously, but I have a feeling it's going to end up bad.
All right. Well, that sounds very ominous indeed.
Yeah.
All right. Let's turn to Wall Street in particular. So much anticipation over Nvidia's results, and it's done it again.
Right.
It keeps beating those expectations.
Here's the problem, and it's always a problem. Nvidia beats all the time. Nvidia's numbers keep going up and up. We keep hearing, oh, you've got to look because the higher they go and the higher the stock goes, it can't keep performing. That's not true. I can tell you that my clients came in today long. For 2 years, I've had clients that follow my research long Nvidia. Their base price was $45. The stock's, $197 as we're talking. And I told them again to cut the position down, get down to about a third of what you'd normally own. And we've been doing that along the line. If they're following what I do, and I have no way to know, I don't manage people's money. I provide an advisory service. And that gives you buying power on the drop. They're the game in town. When they go bad, the whole thing goes bad. And until that happens, no. You saw Salesforce today come out, and they're down $10 a share in the market, 10% rather, in the market after the market. And they're announcing a $50 billion buyback. They're increasing their numbers. The problem is, for anything to do other than Nvidia in this game is a rough game. And it's rough because we keep getting Anthropic and OpenAI coming out and saying they can write things better. So what can't they do? They can't manufacture, they can't mine. So miners look good to me. They can't build an automobile. They can design an automobile, but can't build it. It's another thing that might be okay. So you've got to go defensive right now for a while and accept the fact that at this point in time, until we see a bottom come in software stocks, that's a place to avoid. Nvidia is the outlier, and that's how I'm going to approach it.
Do you feel as though, I mean, given what's happened with those software stocks in particular, given the threat, excuse me, of AI, we did hear from Anthropic. It's come out with new tools, and it made the point of saying this isn't replacing software, it's enhancing it.
Well, that's their point of view. The problem is it does enhance to the point where you don't need the manufacturer that you bought your original software from, because you're able, if a learning piece, and that's what Anthropic is, if a learning tool can continue to learn and it can write code, what makes you think it can't write code that replaces exactly what you've been buying from these software companies? And that becomes the big problem. And as it writes the code, you're going to say to yourself, well, I'm buying 5 seats, and that's what they call licenses in my division, or 50 seats, whatever the number is. Why do I need to keep doing that? You know, you hear the word CRM software, which is what Salesforce is. Why do you think it's down? It's down for one reason. As good as they are, and they branched out doing many things, they are being threatened by the likes of AI and OpenAI that can write the same code. So that is why you've got to be careful. Turn your attention to the ETF IGV. When you see that bottom out, then you can get a little bit friendly to markets and say maybe we've gotten to a point where whoever's going to survive survives, but there's not a lot of downside left because we've taken all the fluff out of those stocks. That is what I'm watching.
All right. Great to get across your view of the world. Thanks for joining us from Linn Associates.
Thanks for having me.
Let's check in then where we're likely to get going on the local market. SPY futures there up marginally. That's despite a very positive session we saw on global markets, in particular a rally in those tech stocks. And of course, lots of results to get across, and we'll do that in just a moment. Stay with us.